Hi, I'm Al from the Money Study, bringing you another episode of our Take 10 Challenge, number 28, called Carry Forward Contributions. Putting some money in, getting tax deductions, but perhaps using up a little bit of space from previous years that you didn't take advantage of all the rules. Let's find out about it, but before we do, there's our disclaimer, all about facts, all about figures, it's information, it is not to be deemed as advice. So, carry forward contributions. What it means is that we talked about in the previous session about making concessional contributions and getting tax deductions. We found out that the cap was 27,500, and if you thought, gosh, that's a great idea, I should have done it last year. Well, if you didn't do it last year, then depending on your total money in your super fund, you may be indeed able to go back in time to say, yep, I'll now put in that money from last year as well. Now, it's only available, this system, if your total super, and I'm talking about across all super funds, so if you had 10 super funds, what do they all add up to? If the total balance is under $500,000 total, then yes, you can make additional concessionals above your normal annual cap if you didn't use them up in previous years. Now, this used to be called a catch-up contribution, which I sort of found, not a bad term, but yep, catch up, carry forward. Basically, it's the same thing. We're basically talking about using other allowances from previous years to then catch up with what we, back to normal. So any unused caps can be carried forward on a rolling basis for a period of 5 consecutive years. Now, it started in 2018. And of course, so in our 23-24 financial year, this financial year, yep, we can indeed go back 5 years. A few years ago, we could only go back 1 or 2 years. But now, with where we're at, we can indeed go back 5 years. So we can look back at the last 5 years, find out what our cap space was, and say, gee, and we can just add it all up. And that's our total amount we can do in this financial year, depending on what the total is. Okay, so it's pretty good for people who've got a interrupted work pattern. So they might, one year they might be earning a lot of money, in which case they can contribute a lot. Other years they're not earning much, so therefore they can't contribute much and didn't get anywhere near the cap. So by using this rule, it sort of allows them to sort of iron out their incomes to be able to make contributions. Now, of course, it gets to a point where not much point putting in a huge lump of money as a concessional if you haven't got enough tax to deduct. Not much point in putting in $70,000 as concessional to claim tax deductions if you only earn 50, because there's just not enough tax to deduct it that way. You'd save it for another year when you indeed did have enough income, enough tax to warrant the contributions to reduce your tax bill. So to find out what your carry forward amount is, you can just log into your MyGov account, and hope you've all got a MyGov account by now. You access it through the AT service there, and in the menu you just select information, and then you'll see this carry forward concessional contributions amount. And well, actually the amount that they show is the unused cap. So whatever it says there. So if in this example, if you've got a 60,000 unused cap displayed, means you could actually do the 60,000 you didn't use plus the normal 27.5 for this financial year without exceeding your cap. So you could actually put in 87,500 in 1 year claiming tax deductions on the lot. But I say you'd probably want to have a good income well over $100,000 before you even considered that amount of money to claim concessional deductions there. Remember, it still applies to the applicable thing for this financial year. You still have to subtract off the 87.5, whatever employer contributions you're also receiving in that year. Okay, but the unused cap is just a total amount that you can just add to whatever your cap is for the current financial year. So no forms required. You don't have to tell them it's a carry forward contribution. It's just literally that the tax department is keeping a record of what's going on here. You can basically go to your employer and up your salary sacrifice by a huge amount to make up for previous years, or you could literally just plonk the money in from a bank account or whatever, and then just fill out the form to claim the tax deduction, just like we have in under normal circumstances. There's no special forms you need to tell the super fund that it's a carry forward. It all gets sorted out in the wash once the ATO looks at it. So here's an example here where you can see in 2018-19 financial year, the cap was only $25,000. So you've actually still only got a $25,000 cap for that year. Just because the cap's gone to 27.5 doesn't mean that you can go back in time and do 27.5 the last 5 years. No, it was whatever the cap was in those financial years. And you can see there 18-19, 19-20 and 2021, the cap was only 25,000. Went up to 27.5 last year and this year. And of course, if it goes to 30 going forward, we'll be able to carry forward more, and so it goes on. Then what went into Kylie's account was 10,000. Now that might be she just put in 10 grand because she's working for herself and claiming tax deductions, or she may not even been contributing. That's just what's gone in from her employer, or it could be a combination of both. But you see, she's got a cap in 2018-19 of 25,000. She basically had $10,000 going in as concessional contributions, leaving her with a space of 15. She didn't use the 15, so therefore that 15 became part of her unused concessional cap. 2019, she did exactly the same thing as the 19-20 year she did in the 18-19 year, and therefore at the end of the year she's now got double the amount in unused. She's now got 30,000. Similarly, she does exactly the same thing in the next financial year. So by end of year 3, she's now got an extra $45,000 she could contribute to super and claim the tax deduction for doing so. Remembering that when she does it, her account balance has to be underneath the $500,000. 2021, she's still only putting in 10 grand, but because the cap's gone up, she's now got an unused cap space there of 17,500. And so her unused sneaks up to 62,500, and similarly one more year, another 17,500. She's now brought this thing up to a nice round number there of $80,000. So she can actually put in $80,000 extra as a concessional without any problems whatsoever, no forms. She gets the tax deduction on all of it, providing her income is indeed under 500,000. But as I say, if you don't have enough tax to deduct, well then okay, just carry it forward to next year. So you might only think, okay, well I can do 80, but I'm really only going to get a tax deduction based on what are my numbers at the moment on 60,000 or whatever it may be. Only get the benefit for doing 60, then only do 60 and carry the remaining 20 over. It's a 5-year rolling period. So what means is that when you get into the next year, so if Kylie gets into 23-24 financial year, into this financial year, then the numbers in 18-19 will disappear, and they'll add the following year, and so it goes on. So in a few more years' time, 3 years' time, those first 3 columns will be disappeared and replaced with the columns from the last 3 years, and so it goes on. So just a rolling period, moving forward 1 year at a time, and the oldest one falls off. So if you don't use that $15,000 in 2018-19, within 5 years it disappears. It disappears. It's just a 5-year period. Plenty of information there on the ATO website and giving you some examples and so forth. But if you need a bit of help to make sure you're qualifying and need to do some number crunching or whatever, don't hesitate to book it with us and we'll help you out.